What's up? Good morning, everybody. How's everybody doing? Let me know in the chat if you guys can hear me and see me. This is my first time doing the stream with ChartFanatics, so I want to make sure everything's good to go. Good morning, good morning. Nermer, good morning. Benny, good morning. See you in here. Liva, Freedom, Newton, what's up, what's up? Good morning, thanks everybody. Thanks for letting me know. Cool. So this is my first stream here on ChartFanatics. If you've been following me for a while, I do a lot of streams on YouTube, and I post a lot of trade recaps and tips and insights for order flow trading on Instagram as well. But I'm excited to be a part of this channel. I've been following it for a while. Really good stuff, really good traders here, so it's an honor to be a part of it. I will take questions here this morning. We'll talk about things a little bit, talk about my game plan. We can talk about some order flow trading concepts, things like that. I'll be honest with you guys, the market's in a bit of a tricky place. So just a brief bit about me. I've been trading since 2016, day trading since around 2020, 2021. And I'm primarily just an order flow trader. I trade ES, the S&P 500. I do trade options a bit, but primarily day trading ES futures. I do trade NQ from time to time, specifically, if setups are lining up better on that, or if volatility is just super dead on ES, it can be pretty grindy. But for the most part, like 90% of the time, I'm just trading ES. So ES is kind of my S&P in general, is just kind of my baby. So that's what I do. Hopefully, the order flow concepts and the things that I talk about work pretty much across the board, but that's just, my niche. It's definitely more of a niche where you become more of an expert at one or just a few things. There's a couple different ways. You can either master specific types of price action setups, and you can look to trade a lot of different assets, or you can kind of niche down to a few different setups and really kind of master just a couple instruments, one or two. And that's kind of where I am at on the spectrum. Thanks for the welcome, guys. Thanks for the welcome. Doing well. It's been a little bit of a choppy week. I don't like to complain or moan or anything like that. It just is what it is, right? The market goes up, it goes down, it goes sideways. So it's our job to adapt. It's our job to just survive when conditions are not greatly aligned with the setups that we trade, and then capitalize when they are. The first part of that being just survive, risk management, protect capital. And a lot of people struggle with that more than anything in trading. A lot of people know how to make money on setups, but not a lot of people have the patience and discipline and are systematized enough to sit on their hands when they need to and capitalize when there is opportunity. What's up? Thanks. So I'll get into the analysis and the game plan, but I'll spend a few minutes here. I got my iced latte just made. So in Florida, we drink iced lattes because it's hot all the time. I'll take any questions in the chat that you guys got. We can talk about some things. If you want to know anything about me, if you want to know anything about strategy, I'll dive into it lightly. We only got a couple hours here, but if you're newer to order flow stuff, I do have like 100+ hours of live trading content shared on YouTube you can check out. There's a lot of gold information about order flow. I know it's a lot to go through, but heard you giving away prop for account if possible. I really appreciate it. I think we do some giveaways, guys. ChartFanatics has some great sponsors that do a lot of giveaways for the community and power really a ton of free content that ChartFanatics puts out. They put out a ton of gold information for literally free for people. And that's really only done by having great sponsors. And they're also giving even more free value is some giveaways that will go through later in the session. So for me, just kind of an overview, I typically, for years I went through trading pretty much all day, every day, right? And I still do at certain times, depending on the volatility, if there's good opportunities. For me now, I primarily just focused on when there's enough juice to squeeze, when volatility and volume are good. And that's typically from like 9:30 a.m. open till around 11 a.m. And that's when we have some overlap from London trading with the New York Open. It's when volume and volatility is best. I'm a scalping trader, so I'm typically in and out of trades pretty quick. And so for me, there's the most juice to squeeze when there's a decent amount of volume and volatility in those first couple hours. After that, it can get choppy. Sometimes I will look to trade the afternoons between like 1:30 and 4 p.m. I did just a couple days ago during FOMC. So if you'd like to see how I trade during FOMC, that recording is shared for free on YouTube. You can check it out. So I swing trade when there is good opportunity set up on SPY and QQQ, but I trade options on that. I don't like to swing trade futures so much. For one, it's capital intensive as far as putting on size. There's higher margin requirements. And two, I like to be able to cap my max risk based on position size with options, just in case something crazy happens outside of typical hours when I'm at the charts. Day trading futures is what I primarily do. I don't really day trade so much options. When I do get into a larger swing position, I will typically initiate it based on order flow and things like that, and I will take a position off as a scalp, but I'll usually just go in the full position with options in that case, and then I'll take part of the position off as a scalp if it moves substantially in my favor during that trading day, and then I'll leave. I have targets set that I'll scale out at. But as far as day trading, pretty much futures, and it really depends the time frame that I'm in trades and things like that. It really depends on the volatility, the context, the type of trade. Is it a trend trade? Is it a mean reversion trade? I trade a few different setups, primarily top and bottom reversals, right? Because the index markets are more often than not a mean reversion market, meaning if it gets too high, it goes back down. If it gets too low, it goes back up. So I trade top and bottom reversals on that based on supply and demand and order flow. Matt, can you share about your military background? It helps you with trading. My husband is in the military Navy and trying to convince him skills are transferable. Yeah, I was in the Marine Corps and Special Operations, and there are definitely things that you get that transfer as far as psychology, having a high level of resilience and discipline and things like that are very helpful in trading. But anytime you come into a new game, even if you have skills in another game, it's not always one-to-one transferable, and it can shock you how much you may struggle with things that you thought you had mastered in other areas of your life when you come into trading. So I always recommend people starting small. The slogan I always say is win slow, suck less, right? Have a long-term vision to win slowly and compounded over time, and suck less. Focus on eliminating mistakes. And that's I think those two things are the biggest reason why 98% of traders fail, right? Because they're trying to do too much too fast with too little, and it just sets you up to fail in a very difficult game like this. So yeah, there are transferable skills you could take from other things. I'm a very systematized person. I was an engineer. I went to school for computer science, and I'm a very disciplined person, being in the military. But it can also, coming into trading, it doesn't automatically, you still have to work hard. And it was difficult for me in trading. It took a few years because I had a lot of success in other areas, right? Like I didn't come from the bottom into trading, right? I was actually very successful in other areas of my life, and people can say, oh yeah, first world problems, right? Yeah, I guess, but I wanted more and got into trading, and it was very humbling because, I thought I should do well. Like I have every reason to do well. I'm very successful in a lot of things, and I did not. And it was a struggle for a long time because like I said, it's a very difficult game. You have to really humble yourself and master yourself and the markets at the same time. What is your biggest aha moment in trading? Did you feel like, to be honest, I never had like a big like 180 aha moment. It was just a long grind of slowly getting over repeating the same mistakes, fighting back. And it's a continuous thing. Like, I feel like a lot of people think that there's this moment in trading where it's like, I got it. I win every day now. The market is my playground. And that's just never the case, man. It's a continuous struggle. Even now for me, like, I still go through up and down periods, right? And it's still, you know, the second you think you have this game completely figured out, you're about to get humbled, right? So it's a continuous work in progress always. I never feel like I had like a major aha moment, but I guess the biggest aha moment is really coming to terms with and understanding for yourself that this is just a probabilities game. And so you have to win over time by just managing the probabilities and not try to force an outcome every day. Like for me, I have the personality type, especially being in the military, being an engineer, like I will accomplish this at all costs, period, no question about it, right? And that is not how you can play the game of trading, because you will lose trying to force a positive outcome every day. You will lose 90 times out of 100. So you have to just understand the probabilities and let go of control, right? Once you have things that work, you know how to be systematized and repeatable about it. It's just a probabilities game, and you can't control the outcome in the short term. Even my best A+ setups have a win percentage, right? That means something that, you know, I can never predict something, you know, this may be my best A+ setup, but something I can't predict may happen in the markets. And that's why it's a constantly changing dynamic, right? And that's why we have to manage risk. But I think one of the biggest aha moments is just really understanding for yourself. And a good tool for that is TradeZella, like tracking your data over time to understand how those things play out over time is clutch. And to really understand for yourself, like you can't control the outcome in this game, no matter how hard you try. You have to just manage the probabilities and be consistent with it over time. What is your ideal risk to reward ratio? I don't take a trade unless it's at least a 2-to-1 opportunity. Ideally, I like to be like 3, 4, 5, 6 range. Like right now, for the month, my average win rate's like 58%. And my average risk to reward is like 6. If you guys haven't read the book Studies in Tape Reading, it's a really good book. It's old, but that's a lot of the concepts that base from, you know, the origins of like understanding tape reading, understanding order flow and everything. And there's something in there, there's a quote in there that talks about, you know, the person that can understand the pivot points in the market, there is very little to lose and very much to gain. And it almost becomes hard to be unprofitable when you start understanding that managing risk versus reward and having a high risk versus reward opportunity is much easier, in my opinion. There's other strategies and there's no one strategy, right? But in my biased opinion, it's much easier to have high risk versus reward and hold winners and be very profitable that way than it is to try to be right often. Like it's much harder to have very low risk versus reward and try to be right 70 to 90% of the time, unless you're a human algorithm, right? That's very hard, in my opinion. Do I trade the wick strategy? I'm honestly not sure what that is, Sniper. I'm not super fluent in all the strategies out there, right? I put a lot of content out on social media and stuff, but honestly, I'm pretty much in my own bubble. I don't watch anyone else's trading. I don't follow anyone else's trading. I just am kind of purely in my own bubble doing my own thing. Welcome in, Laksh. Thanks for that, brother. Do I think there's a minimum time for someone to become profitable, or it can happen anytime, depending on? That's a great question. And it's difficult with all the stuff online around trading to compare yourself, right? Everyone's different. When you can truly get to the point where you change and you get to the point where the pain of staying the same becomes greater than the pain of making changes that you need to make to be a good trader, that's when the point when things will start to turn for you, right? And I don't wish pain on anyone, but I hope people that live in the middle that aren't in much pain have so much pain that it forces them to change, because that's the only way you're going to be profitable and you're going to be a winner in trading over time. All right, so a couple more and then we'll get into the analysis. Guys, I'm going to be honest with you. On Fridays, I generally look for base hits quickly and I look to be in and out. I don't like to have too much exposure late into the day on Fridays. Volume and volatility tends to dwindle out throughout the day, just as more and more participants become sidelined. Today is also Halloween. Happy Halloween, by the way, guys. So I just put yourself in the every time I approach the markets, I'm looking at the auction. And so I'm always thinking about what are other participants in the market doing, right? From a context perspective, is like where we're at in the market. And from an order flow perspective, supply and demand perspective, I'm always thinking about what are other people doing? What is other people's perspective, right? Because when I get in a trade, I need to basically be front running what other people are doing, right? Because if I get in a reversal, I need other, like say I get a bottom reversal, I need other participants to buy after me to drive price in my direction for me to sell to them, right? So that is why I'm constantly putting myself, and I say that to say, okay, if today's Halloween, there's a good chance a lot of people are taking off today, right? To go be with their family, be with their kids, go eat some freaking candy, go get fat, right? Sorry if I offend anyone. It's not my intention, but you know, that may just happen. And it is what it is. I'm just going to be myself. So if you know, I know a lot of participants are going to do that, right? Then what am I thinking? Like, okay, the later the day goes on Fridays, volume and volatility, not always, there's always an exception, right? Nothing is always in the markets, but are going to decline typically over time, especially on a holiday weekend, especially, you know, today's not official like market holiday or anything, but I'm kind of looking at it that way, right? So the other aspect of that is we gapped up and we grind into all-time highs all week so far. And then, you know, we lacked continuation. Some news came out. We swept out the lows. Literally yesterday alone, we took out the highs and lows of the whole week. And then we're back in the middle. So typically when this is happening, one, just from a context perspective, I'm first looking for mean reversion setups, meaning I'm looking for fake outs up and down to target the middle of the range. Still demo. There's a lot of demo traders out there. No, I don't trade prop firms. I don't trade demo. I trade my own personal capital. So yeah, I'm not down to, you know, I'd love to just get on stream and bang out trades with everybody every day, but I take my own trades when I see opportunity. I'm not like on here to like try to call signals and win a following on social media. I'm just a trader, right? So when I see good opportunity, I'll take it. If not, I won't, period. So there's a good chance we're going to continue to see mean reversions until we have a solid breakout. Today we have news at 9:45 a.m. So that's Chicago PMI news, I think. It's been weird because the government shut down, so I'm trying to be like, okay, which news is coming out, which news isn't? I do look at fundamentals like news and stuff just to be aware of when high volatility could come in, right? But I don't trade based on the news, right? Everything that I need to know is in the charts, is in the order flow, because there's such a delay in news. Somebody always knows first, right? Every time anything comes out, I'm going to see it in the order flow first. There's no, you can't lie in the completed transactions, regardless of whether it's an algo, an institution, retail, whatever, an order has to be placed, and I will see the order before it's on the news, before it's a chart pattern, before anything. All right, so let me see. Bear with me, guys, because I'm learning how to manage this stream software with ChartFanatics. All right, can you hear me now? Am I on mute still? All right, guys. All right, audio's back. Do we have audio? Okay. Yeah. Copy. All right. Can people hear me now? All right, cool. Sorry, guys. It's my first time. Bear with me. All right, so before I was so rudely interrupted, you know, there's a significant amount of work that goes into making this stuff happen on the back end, and that wouldn't be possible without these sponsors. So just thank you for that. And like I said, I've been a user of TradeZella myself for a long time. Highly recommend. All right, so I'm going to briefly get into the analysis here. And so this is a bookmap, by the way, and my depth of market. This is my primary order flow tool. So this is what I share during the live streams. I also use things like volume profile and, you know, simple candle charts for context. But my primary order flow analysis tool is bookmap. Sorry, let me grab some latte. And so what we're looking at here is the live orders. There's no time frame for this. I can scroll in and out, and this is just the live tape as orders hit the market. You know, green is aggressive buyers, red is aggressive sellers. And on the heat map here, below price is passive buyers. On the heat map above price is passive sellers. Sorry, it's complicated. It may get easier and simpler over time with viewing it. It's actually, you know, order flow, it seems complicated at first getting into it. But the more you understand just the relationship of the market auction between buyers and sellers, it becomes actually, you know, not as simple and overwhelming as it appears early on. So I'm going to share my game plan over here in the ChartFanatics Discord. So if you want to reference it, you can. This was posted this morning earlier. I'm going to share it over on the ChartFanatics side. And so let me just run through it quick here. But let me take one of my charts. I'm actually gonna have to take a snip, guys, because I can't really move my screens around too well with this setup. I don't want to lose the charts on my screen. We're kind of in the middle here, so off the open, and we have news coming out at 9:45. So we're right back in the middle of this range, like dead center. And when I see a balance range forming, I'm looking to trade the edges. I'm not looking to get effed up in the middle of the balance range, right? So with that in mind, there's not really much I'm looking for right off the bell here. I generally don't take trades in the first like a minute or two. There's just too much volume and volatility, easy to get swept out unless something is just perfect. So hopefully you guys can see this. I'm going to try to do this in a way that maximizes our screen real estate here. Right. So this is just a daily chart on ES. And one of the things that I was watching is this upper trend line here. I don't trade off trend lines, I want to be clear, but I look at things from technical analysis, trend lines, supply and demand, support and resistance, where I know other participants in the market are participating around, right? So you can see I was watching this trend line up here. It wasn't super tradable. I'm not going to just go short all-time highs, and it got pretty choppy up there, but you can see just how sellers are trying to resist there after we gapped up this week and hit that trend line. This is a daily chart, by the way, on ES. So I'm observing that context as we form possibly a short-term top here, but it's very much in the middle. I'm just putting some pieces of context together for you guys. Normally I would go more in depth for game plans, but one, we're just like in the middle of a range here, and two, kind of running out of time, and I want to talk through the order flow stuff here during the live market. All right, so a couple key things here. I'm going to pull up a 4-hour chart now on ES again. So things that I watch primarily ES, NQ, and the VIX volatility index on futures. And another big driving factor in the markets lately has been semiconductors for the last year and a half. So I watched the index on that SOX, SOX. All right, so looking at the 4-hour chart here, you can see we had this gap zone. Again, a lot of participants look at those zones. So since we kind of, not cleanly, but we did consolidate and rejected that trend line up there. We dropped back yesterday. We can see how buyers tried to defend the dips multiple times into there. And we are kind of grinding back higher. But we're still kind of in the middle of the range. If I draw a fib on the weekly range here, top to bottom, which traded yesterday, the exact middle of that range is 69.02. So we're basically oscillating around that. And I'll show you guys some stuff on the volume profile as well. I just start for context on higher time frame charts, and I start working my way down through it. Market open is in 1 minute. But again, like I said, there's nothing at current location that I'm looking for right off the bell here. So inside this range, I'm looking to don't touch it. Just for context. Now there's a couple areas of interest nearby. We already hit one of them in the pre-market. And so that setup has already played, and that was one of my 2 top setups for today. So it is a little bit unfortunate when, especially being on a Friday and one of the kind of the top game plans for the day already kind of plays out. But you can see we had this range form yesterday on this really choppy thing there. Ding, ding. And I'll show you this on a volume profile so this makes more sense. But I was looking at these regular trading hour highs here. I was looking for a fake out and mean reversion there, and that's already played. Now, the other thing that I'm looking for is a drop under these lows for a fake out and mean reversion, especially if we hold around here. There was some larger buying that occurred there yesterday between 68.70 and 75, which I can show you on a footprint chart if I go back to that time. But there was, I think, several orders, like 800 lots, 400 lots, 200 lots, something. There was some decent size there, and you can see for all you ICT boys, your favorite green boner right there. So I'm watching that area down there. If we drop into that 68.70 to 75, or if we just hold above it and we sweep out the liquidity under the overnight lows, I'll also be watching that. But the main thing, in addition to my game plan of what I'm looking to do for a game plan, I'm also very cognizant of what I'm not looking to do. And what I'm not looking to do is get chopped up in the middle. And this has been going on for 2 days now. So let me take another snip here and talk about volume profile. So this just adds more tangible confluence. Gosh darn it. Hang on a second. I don't know why this happens. Sometimes my snip does not work. There we go. All right. So I'm looking at the volume profile here. This is a 30-minute candle chart. This is my Sierra chart setup. I'm trying to get this in view well here. All right, so this is my Sierra chart setup. You can see I'm looking at a volume profile, a day volume profile on a 30-minute candle chart, and this is the whole daily range. I also have this set up almost identically on Trade-Evate. So if you want this setup, if you want footprint charts or volume profile charts set up exactly the way that I have, then check out, I have videos posted for free on how to set that up on Trade-Evate. I know a lot of people like Trade-Evate. I still like Trade-Evate. I use Trade-Evate for a long time. All right, so looking at this area here, you can just see where all this volume has been amassed. Like, so what's going on here? Buyers and sellers are roughly just agreeing on price, right? So when we're balancing and stuff like this, yeah, there can be accumulation or distribution going on by larger participants. And we'll see depending on how we react out of that. But, you know, for the present moment in time, buyers and sellers in this range are roughly agreeing on price. And we can see as we move out of that, volume declines. And if we move above it, volume declines. So there's just a lack of participation in the auction above or below this range. You can see the point of control right there, you know, back to back right in the middle. This was an impressive move from buyers here. We dropped, you know, I didn't have this on my bingo cards, but again, I'm never surprised anymore by these V-shaped recoveries because it's just been on repeat mode for like the last 2 years. And I will be honest with you, like 90% of my profit has come from bottom reversal setups. It's just been on repeat mode again and again and again and again. So until that stops working, I'm gonna keep playing it. But we dropped all the way down into that gap zone. I think that gap zone was, for me, I had it marked. Look at my trading charts here. Yes. So I was looking at 68.65 to 68.41. We dropped into that zone yesterday. We are kind of trying to break the low of this range. So that top reversal setup, that fake out top reversal setup worked perfectly. Unfortunately, it just happened in the pre-market over here. So if we drop down towards the low extreme of that range, then I'll be looked to get involved. But I just wanted to tell you, you know, show you guys overall like what I'm watching and why and where. If we got started earlier here, I could have gone through that in the pre-market a little bit better, but I kind of want to watch the order flow here now that we're dropping, sweeping back towards the low of that range. So if you guys are ICT traders, any of you, or have some experience, I'm going to try to relate this a little bit to you, what happened up here. I think Linda, who was it? Linda Rash talked about the turtle soup type setup. But a lot of people play like liquidity grab reversal setups, right? Like the 2022 ICT model, fake out reversal setup with a fair value gap. A lot of people know about that. I'll show you why it works. And you can learn to see it with order flow to know like when there's a very good chance it's going to work and when there's a very good chance it's not going to work. This right here, so look at all of this aggressive buying in the pre-market as we swept over the low, over the highs. Hang on, we just swept those lows under the 93s. It's not quite deep enough that I'd be super interested in it unless I see something really significant. You can see, so on the DOM over here, by the way, I have this set to automatically clear after the 9:30 bell for regular trading hours because on my volume profiles on my other chart, I have the full daily range, but as far as my DOM data here, I want to see just what's transacted after the 9:30 bell, right? Trying to give you guys just the best information in the shortest amount of time because, you know, we have one trading session here. I think we'll be back on Fridays, so there will be a lot more information to come. But I'm trying to give you guys like many years of information in a couple hours. So So 96 was kind of the low of that high volume range, and it was also we also like quadruple bottomed it there overnight. We just swept under it. We didn't quite sweep deep enough though to a key area where I'm looking to step in necessarily, but I do like how there was a 284 lot negative delta that hit on the break right here. See that on the DOM. I'm looking at that on my footprint charts, but I'm seeing that over here on the DOM as well. So I'll talk about it here because it's the same thing as the top reversal that I was just going to say. So 284 aggressive sellers hit the low on that breakdown right there, right? So that may continue, that may not, but right now a ton of aggressive selling came in, and you can see right here on the heat map, a passive buyer said, thank you very much, I'll buy that, right? So that's why price didn't continue lower. We saw a large negative delta there, but it was right at a passive buyer that stepped in. Look at that, 93, 68, 93, right there. So a passive buyer obviously put an order in quick and bought that dip, and now we recaptured back above those 96. We have news coming out in a few minutes, Chicago PMI news. It really depends. Somebody asked, how many trades do I take per month? Really depends on the opportunity. I don't have like a hard limit per se. I would tell you like 90% of the time I'm in 1 to 4 trades in a day, but there are times where there's times where I take 0 trades. Like there's been a day or two this week I've taken 0 trades. And there's other days where there's very good volatility, there's very good opportunity. And typically on those days I'm sized lower too, but I'll maybe take 5 to 10 trades. It just depends on the opportunity, right? So I'm just reacting to what the market presents. Selling is continuing to build here at the lows, right? So we saw that absorption there, but on this buying, look at how these buying bubbles are relatively small compared to the size of these selling bubbles. Passive buying versus passive selling. A passive buyer means like a limit buyer, right? So they're setting limit orders to buy. They're not buying at the market. They're buying limit. So they're only willing to buy at this price if it drops to it. And that's what creates absorption, right? But I always give the example, it's like a sponge versus a faucet. So the passive buyers in this case are like a sponge sticking under a dripping faucet. Now, if that is a really big sponge and the faucet is just dripping very slightly, and then the faucet stops dripping, well, that sponge has absorbed every drip, and now there's no more drips, and there's only one way for the market to go, which is up. On the other hand, if somebody, flips the switch on that faucet and that faucet becomes a fire hydrant, then the absorption is going to get washed through, right? The sponge is going to get saturated and it's going to start running water through it. So that's kind of like a mental way of envisioning like what a the relationship between a passive and aggressive participants as we watch it. So it's not as simple as like, oh, there's a sponge here, there's absorption here. Well, yeah, that may be true, but it may get saturated and just wash right through as we continue going. So it's important to gauge the reaction after that, if it's continued or if it washes through. It's also important to gauge the location. Like, it would be a mistake to overanalyze order flow when you're going against the, if you're in like the middle of a range or you're going against the overall momentum in the market, right? You don't want to overanalyze things and go against the direction the market is gravitating, the direction that, participants are in control. And right now, clearly we see, sellers are in control of the current auction until something changes, right? Because look at each pop, every time we pop, there's relatively small buying, and each time we break the lows, look at how relatively large these selling bubbles are, right? Look at the size of that bubble and the size of that bubble at this high. So as we're gravitating lower, more and more aggressive selling is coming in and driving the market lower. And each time we pop, less and less buyers are involved. And so we make a high and we can see this passive seller here, and we gravitate back lower again. So in this example, we're kind of seeing like a break of that low of that range at 96 and retest. So that's why I didn't try to go long here, because look at this. So we had that break of 96 and then we tried to recapture it, right? And this is an example of knowing like when to not try to catch like the turtle soup setup, as somebody calls it, right? When to not try to trade the fake out, right? Because I saw all this aggressive selling, but then on this pop that recaptured, that buying was not very significant. And then look how it just dwindled. It just dwindled until there was no buying left, and then we swept back lower again. So not ideal to try to catch a fake out bottom reversal here when I see continued heavy selling gravitating, and then the pop that tried to recapture that 96, that low of that range, just dwindled off with relatively weak buying. Now to the other extreme, if I saw that aggressive selling come in and then larger aggressive buying recaptured, and then we pulled back again and the selling was weak, then I would look to go long for that mean reversion setup. But right now we're just seeing continued heavy selling, and just look at how large and aggressive the selling is, and every little pop is just getting sold into. Look at this weak little pop buying just getting sold right into and just gravitating lower. So we may have already had like the break and retest of this setup here. We'll watch and see if we get another pop to retest it. But otherwise, I'm just standing by and waiting for that key area that I talked about before, which the first key area that I really see is 70 to 75. But if I see something new that develops here, now that we've really fully swept out the overnight lows, which were around 87 during the Asia trading session, we swept out under those 87. So if buyers step in here, I'm open to seeing if something develops. I'm not going to say no, but I would rather see it, and I'd put more size on for it if we're at a better key area. Yeah, and news in 2 minutes, right? Exactly. Thanks, Blair. News in 2 minutes. So I'm definitely not looking to get involved right now. I'm just trying to walk you guys through what I'm seeing on the order flow. So grab your popcorn. We're going to watch what happens with the PMI. It can spark some good volatility. That one can be a banger. But I don't know how much, because you never know how much, right? But we have a holiday. We're in the middle of the trading week range. And so if anything, it might just accelerate a pop back towards that mean reversion. So aggressive buying stepped in here, but you'll notice my absorption indicator just triggered on Bookmap because there was a passive seller right there. So you see this on the heat map. So aggressive buying tried to step in, and a passive seller stepped in and met them. Now we'll see if something happens with this. If we now break back above this, that may be interesting if we recapture these 85s, 87s with aggressive buying. We can see some aggressive buying stepping in. This is different than what we've seen so far this morning. So I'm watching this little area here, but the news is coming out right now. So it's unfortunate when one of these things happens like right on the news, because I'm just not really willing to gamble. But if we see it, something good set up a few minutes after. It's kind of going to be interesting above or below, right? If we fail here and we break below it, then it's also going to be interesting, like a breakdown from this and retest here. It's a little low though for me to look to continue to initiate shorts here, right? Obviously we could completely have the bottom fall out of this and we could trade 100 points lower from here, but there's areas of demand nearby below us that the market could bounce from, and those would be my best probability targets for shorts. So it's not ideal now down here to be initiating shorts because just the risk versus reward isn't great, right? For me to take trades, I like to see a good opportunity both in terms of win rate. So like I'm seeing, I'm going with the market. I see a good opportunity to go with momentum. And also, I need to see a good opportunity in terms of risk versus reward. So if one or the other isn't there, I'm not putting on a trade. We can see how this activity got a little interesting here. After that 9:45 news, you can see how we were just going straight down. And then since that order came in, the market's like, hold up, what just happened here? Because we didn't see a large buying order like that this whole way down, right? So that as soon as I see that happen, after we swept the Asia session low there, then I'm like, okay, put a star on that and just let's watch what happens here. It happened like 15 seconds before the news too, which is like, okay, who is putting on a 600 something lot order 15 seconds before the news, right? That's interesting. It's been, if you're struggling this month, I've been trading for a while, and it's always tricky conditions when the market's just kind of grinding at all-time highs. It can be very like FOMO triggering, like when you see like large moves happen suddenly, and then it kind of lacks continuation and grinds sideways, and it can be very emotionally volatile, which can trigger you to make poor trading decisions. So you have to be very cognizant of that. And that's very much been the conditions lately. Like we just kind of grind up. We'll have a quick, volatile move, and then it kind of lacks continuation and grinds. And that's kind of the nature of price action around, when we're grinding at all-time highs and the market is kind of sensitive to some different news things going on. Obviously the market is bullish because we're near all-time highs, but shorter time frame, like within the last week or two, and a lot of the times this month, it's been, challenging to identify good setups and get good continuation. You can see how just the battle that's going on, like since we marked this zone all the way back here. And if you're looking at a candle chart, you don't really understand or see like what's going on. It's like, oh, this thing's just kind of going dead. Well, when you pull up this, we pull the curtain back and see what's going on. Like after this large order hit, we're kind of like going back and forth in the auction now, right? So you just get, regardless of like what strategy you use, like if you just add even just like level 1 understanding of some order flow that you can watch to add confluence to your entries, you'll get better entries and you'll understand better what's going on without just a candle chart. I'm saying like, even if you're not just like an order flow trader, there's a large buying order that just hit 230 lots at 68.86. So I'm still liking this possibly now. If we break these highs right here with some aggressive buying and pull back, I may be interested in going long here, just targeting that mean reversion back up towards those 96s to 6900s. What I don't want to see is a pop over these highs here that gets smoked by passive sellers, and then we sweep back through these lows and continue lower. If we see some aggressive buying above these highs, and this is like how I'm kind of gauging whether we reverse from here or fake out from here. And if it just takes off without me, without giving a good opportunity pullback, then I'll just miss it. But you can see, so it's kind of taking off, but see how the script just flipped? Like on that whole move lower, we were seeing like weaker buying on the pops and like large heavy selling on the lows.
Do you guys see how, like, since this zone developed here, that just flipped? Now look at how the selling is weaker and smaller at the lows. Now that could change any moment. Like, passive sellers could reload and we could sweep back through here. But do you see in real time, like, how we just went from heavy selling at the lows, weak buying at the highs, to some aggressive buying stepped in a couple times here. We kind of consolidated a bit, and now we're seeing like weaker selling at the lows and some larger buying coming at the highs, trying to get over these prior highs. It's not super clean and clear, right? It's still a little gray here just because we're kind of chopping a little bit. It's not like A+ volatility here for a setup. It's kind of trying to grind its way back up, but there we go. So this was kind of a nice opportunity to go long here. I didn't take it, but I'm just kind of focused on talking you guys through this more than anything today. But I am still watching it if we pull back, especially if we hold above this box and see this passive buyer stepping in here around 86s. Again, nothing's 100%. We could sweep right back down through it. Sellers have been in control of the tape so far this morning, and that could still be the case as long as we reject under these 96s. But I would just like kind of be targeting that mean reversion. The other thing that's making this not quite as A+ for me is the fact that we swept out the overnight lows, but we really didn't come to any kind of significant demand area or anything. So we're kind of just developing this intraday on the fly. Wow, look at that. See how we quickly popped off that? Again, you'd have no way of knowing that would happen there just looking at a candle, but we see how that passive buyer stepped in here on the heat map, and like, look where that bottom happened at. Look where that popped off of. We're still above this zone too. But this is kind of what I was talking about. Like, if I see some larger buying step in now that we're breaking these highs, and then weaker selling on a pullback, that's where I'm looking to possibly go long and then just target that mean reversion. Here's VWAP up here at the 97s. You can Google it here. Let me send you a link. I do have a discount link. I don't know if this is okay with ChartFanatics though, but I haven't asked. So I'm new here. I'm the new guy, guys. So some large selling coming in now, trying to sweep this thing lower. This is kind of the nature that we've seen a lot lately, is just how anytime the tape is thin, right? Thin being there's just not a lot of volume on the bid and ask. It's a little wicky, and kind of the bottom or top can just fall out of it at any moment. Because it doesn't take a significant amount of orders like to sweep much lower. You can see we didn't really see large selling here by any means, but it just easily swept back lower because the tape is kind of thin. But we did bounce again right inside this box here, right where this passive buyer was sitting. I'm just not seeing much like significant that's like gonna make me click buy or sell right here. I'm seeing it sometimes, you see it, you see what's developing, and like, yeah, I can see this on the order flow, but I'm not seeing anything large and aggressive and like volatile. That's like, it's almost, you develop this over time, but it's almost like a spidey sense. Like I know it when I see it, and it's like an impulsive reaction. I take the trade, period. Like it's like an involuntary bodily reaction. I just have seen it so many times. I just take the trade. And, sometimes I don't see anything and the trade works out. I just don't see a good entry confirmation. I just sit out of it. I don't love how buyers though are struggling here kind of. We could still bounce off this for sure, but I don't love how all this aggressive buying came in, and I'm not seeing a whole lot of significant defense here yet on the retest of this zone. Like that could change and we could shoot off of here for sure any moment, right? Every moment is unique. Something new could happen. But just right now, my observations is just it just is a little 50-50 here. I'm not seeing anything that screams like buy the dip yet, even though it could totally work and we're in this kind of zone. That's a good question. Benny asked, let's say price is at a point of interest like demand or supply zone. How can I combine that with order flow to come up with a good entry? So I'll just show you here. Like, it's kind of the stuff that I've been talking through, because I look at supply and demand zones, but it's not like I'm just executing off them, because I would just be kind of like blindly guessing. I can see, like, inside of a supply or demand zone, I can see specifically where large orders are coming in. And I can use that to get very, very precise risk versus reward within the context of understanding, okay, we're in a demand zone, I'm looking to be a buyer here. And I can pinpoint that very, very much more accurately, which is how I'm able to get really high risk versus reward opportunities, because I'm not just guessing like where buyers are coming in a demand zone. I can see where buyers are coming in a demand zone. I'll show you what this looks like. Let me take a snip here and I'll move it over on screen. On my footprint chart, for example, I love footprint charts. This is a 5-point range chart. I do love footprint charts as well. I like the view of both. Because this gives me a good view of the pace of the market. So these are 5-point range bars for each bar here. So it's not specifically time-based. It only opens up a new bar when we move into a new 5-point range. So that gives me a good feel of the pace of the market, right? Regardless of size, I'm able to see how quickly, based and kind of get a feel for the position size, how quickly buyers or sellers are able to move price up and down. So I'll throw a hypothetical. Say I was watching this like 89, say on the candle chart, whatever, hypothetically, I had this area from like 89 to 80 marked as like a demand zone, hypothetically, right? And then as we dropped in here, say I saw that's where those orders came in, right? Over here. And this is kind of a facetious example because I would have never gotten a trade, a minute before news, but I'm just trying to give you a real world example. So say this is a demand zone that I was watching, and I see, okay, now here in this demand zone, I see all this aggressive buying stepping in right there, right? 400 something lots. That's deep pockets, right? Somebody's buying the dip here. And then, not just one time, right? But then I see more here. That's at a specific tick in price. What is that? Like 500 something lots? That's more aggressive buying. Okay, now I'm like, okay, demand zone confirmed. Let me watch this zone. You're right. Sellers tried to reject and continue lower here and didn't go anywhere, right? At this present moment in time. So that means not only are aggressive buyers stepping in, but if all this aggressive selling came in and price didn't go lower at all, that's who's on the other side of that order, a passive buyer, right? And then more aggressive buying stepping in. So now I'm like, okay, demand zone confirmed. If I get a little pullback and I see that again, I'm going to go long here, and I'm only going to have a few point stop under these lows. Now, I didn't do that in this example because one, this is not a very key demand zone. And two, when we popped up here, the buying kind of fizzled. We had a little large order there. I just didn't see a ton. And you can see, obviously, we stepped those lows. We still haven't broken these lows yet. But this is just real-time order flow. Like, we don't have a good supply or demand zone here or anything like that. But this is how I came up with this key zone all the way back here in real time before the news. And then you can see how we were selling off aggressively all morning. But then since these orders occurred right here, we tried to bottom here, right? So that's how I was able to see it before it happened. Not before, like as it happened, right? Versus waiting to see something form on a candle chart, which, yeah, you can do that. You're just not going to have as precise entry, and you're not going to have as good of risk versus reward. This is a great example here. Let me kind of zoom out here a bit. I'm just going to zoom out here and show you, like, just to show you like why this is so useful, right? This is my ES footprint chart. So you can see as we downtrended all morning, we were watching on Bookmap how we had that heavier selling on low, and we can see down here on the cumulative delta how large that selling was. And then, you know, a few minutes before the news, that order hit, and that's when I marked that zone on Bookmap in real time. I was like, that's different than what we saw this whole way down. You know what I mean? There was nothing on a candle chart in that moment that would have told you, you know, A, do not chase shorts down here anymore. So if anything, it would keep you out of, you know, chasing shorts down here, seeing that. And since then, and you can see on the delta how it shifted there. But this is just, I'm not, you know, telling you a trade setup per se or anything. I'm just explaining to you like why this is valuable to see this happen in real time before you're waiting for some specific random time period on a candle chart to form a pattern. Right? Because you're going to see something different depending on which time frame you have a candle chart set on. And no hate, there's plenty of excellent traders here in ChartFanatics and elsewhere that trade just purely price action with candle charts. There's nothing wrong with that, right? If you have a systematized way of looking at that, great, do it. I'm just showing you like how you can see things in real time to add some precision to that. Buyers are really, you know, kind of struggling here still. Like we can see how this zone is trying to get defended, but what's keeping me out of going long is just how, again, see how these pops, like the buying is not real significant off of it. And so, and on top of that, you know, where buyers appear to be running out of gas here. We've made lower highs now each time. And here comes the break. So sellers very much in control still. We'll see if this zone gets retested. It's now looking better to go short actually on the break and retest and target that gap zone possibly. In this case, you know, this was useful to spot, you know, where to avoid going, you know, chasing short. But then as it developed, it also became more clear, like not to go long either. So just sitting on my hands here. Like I said, for me to put on a trade, like I need to see both a good probabilities sync. Like, so I need good confirmations that it's a good probability entry, but I also need, I need juice to squeeze there for it to be a good risk versus reward trade. If it's great probability, I see great entry confirmations, fantastic. But if I don't, like based on my highest probability targets, if I don't see a good opportunity as far as juice to squeeze in the move, risk versus reward, then I'm just going to sit out. You know, we're just a few points above areas of demand where we could easily, you know, see a lot more aggressive buying step in. So it's very important to add the confluences together and not get too hyper focused on like one thing, whether it's the charts, whether it's the order flow or whatever. You want a good, clear picture overall. So when you see a setup that aligns together with many things, it's like, it just looks like money sitting in the corner of the room and you just got to go pick it up. But a lot of people can't do that because they just can't be patient enough, and their mindset is just not focused on like finding a repeatable trade setup that they look for day in and day out. Their mindset is on wanting to be a part of every move that the market is making, and they are really just clicking buttons, not trading. And if you do that, it's to your own detriment, because like even if you make money doing that, right, in the short term, even if you make money doing that, it doesn't freaking matter, because you're not going to keep the money over time. Genuine question: if price goes up with momentum, we know there's a large buyers, and if price goes down with momentum, we know there are large sellers. So what is the point of looking at Bookmap? That's not true. The price can move up or down depending on the relative size of orders recently. It doesn't always mean that there's large, and retracements always happen. So how do you know specifically where? So say you have, a fair value gap form, right? How do you know, like, say it's a 15-minute candle. How do you know like where specifically in that, like on a retracement, if you're looking, to trade the fair value gap, without understanding the volume and the size of orders and where they occurred? How do you know where is a good probability point and risk versus reward point within that? You can still trade it with price action. I'm not saying you can't. You're just not going to be as precise. You're not going to have as high of risk versus reward. It'd just be impossible. But that doesn't mean you can't trade like that. And if you have something that works for that, don't complicate it, right? I'm all about simplicity, right? This may seem complicated to a lot of people. To me, it's simple because I've been doing it for a long time. But you can see I don't really use any indicators in trading. I don't use anything like that. So to me, that's the simplicity. There's some aggressive buying coming back through this zone now. So you definitely want to have like the minimal things that you need information wise for your strategy, and don't bog your mind down with things that are unnecessary, right? But if you learn this, and if you're already using Orderflow, great. Hopefully we can trade together and you can maybe see things in a different way. There's always new information to learn. But anyway, I digress. I don't know where I'm going. I'm just saying there's an added layer of precision that you get from knowing exactly where participants are trading. And just because a candle moves up or down, you don't specifically know like where the volume was transacted at. And just because it moves up or down doesn't necessarily mean there was large aggressive orders the whole way down. But that was a good question. How much is the tick size on Bookmap? I'm not sure about the question, right? So I can expand price up and down here. ES moves in, one tick increments. This is just showing me the real-time orders as they come in, right? So I can get as granular as I want. The more I zoom out, the more it will like kind of combine orders together. If I zoom all the way out, I can see the whole day, and I'm going to see kind of just a little more macro view. We can see this large delta, positive delta building here around that 85 level, 1600 lots. So that's kind of an interesting point here if buyers are able to recapture, and it's right in the middle of this zone that we drew here between 86 and 82, 83. You can see how since we identified this activity all the way back here, it's continued to kind of be a key pivotal spot up and down. And now there's a large amount of volume delta built here. So it continues to be a point of interest to watch. Up or down, it's just a point of interest. We had a nice bit of volatility up until, we had a nice drop and bounce up until like 950, and since then we're kind of grinding. So I'm looking at a 2-minute candle chart as well. I typically have like 2 and 15-minute candle charts up. There's no time frame on this, right? You can see the time intervals down below, and that changes based on how I scroll in and out to view this. This is just the real-time tape orders coming into the market. So right now you can see it's about a 2-minute interval between these dotted vertical lines, but the bubbles are coming in as they hit the market. There's no time interval. So I can get as granular of a view as I want scrolling in and out. And if I hover over price here, I can expand that up and down the tick spacing. So I'll show you guys what I'm looking at here just on a 2-minute chart, right? So 2-minute chart here, yeah, I'm seeing the weakness. We're making lower highs, but this is what I meant about juice to squeeze. Well, first of all, we can see just on the candle chart how that formed after we saw that order down here. But, I'm watching this zone. This is like a danger zone for me to like shorting into that because of the aggressive buying that occurred there yesterday. So yeah, I'm seeing probability wise we're moving lower, but as far as juice to squeeze, risk versus reward, this is a good probability target unless we break under here, right? If we break under here and continue lower, then that's new information. But initiating shorts into like the low of this range where buyers could come in is just, look at that. It's very 50-50, right? I don't trade one-to-ones. There's just not enough juice to squeeze there for me. Yeah, Forex is different. The order flow analysis works really well with futures because it trades in fixed contract sizes and it trades through a centralized exchange, right? So every order's got to come through here. Forex is different. I've never traded Forex, so I can't speak to it, and I'm not going to speak to it. You can also there's also ways of doing order flow with, even just stocks. Like that's what I did starting out, just time and sales on stocks, reading the tape specifically, like size and speed, even without things like this is essentially just time and sales, right? So if you're looking at level 2, like time and sales on Thinkorswim, this is just visualizing that combined with the heat map is the resting orders on the bid and ask. So we're just watching like the time and sales visualized with bubbles. So yeah, I mean, you can do order flow, with stocks, and even if you trade like SPY and stuff. I trade SPY, and even if I trade like options with like SPY and QQQ, I'm still doing my analysis just on ES and NQ for the futures with order flow. Or you can simply like look at like time and sales and things like that. There are repeatable patterns and things that I look for trade setups. I do like how this large delta came in down here on this breakdown again. I'm just not seeing good edge one way or the other yet. I do like how we formed this bottom here. We tried to break the low again. Look at all this aggressive selling that came in. You can see it over here on the DOM, 781 lots. That's when I'm looking at the order flow stuff, I'm looking at outliers, right? To see like big players showing their hand, right? They can't hide completed transactions, right? So if I'm playing, we're kind of chopping up and down through this, so I'm just going to remove this. I'm still mentally aware of this level, but I just want to get it off the screen. When I'm scalping, right? I'm looking at just the waves that big players make in the market, and I'm just catching a piece. So when I'm looking at the order flow, I'm looking at anomalies and things that happen when bigger players are showing their hand. And when that happens, and that can create reversal points where big players are getting involved, and that creates opportunity for me to just catch a piece when that happens. Let's see in the chat, what did I miss? Sorry guys, I'm not being I'm watching the order flow here because I'm trying to trade myself. Let's see what I miss in the chat. Gold futures, no, but I've never traded gold, but it has been piquing my interest like everybody else because of the volatility that's come in. But, you know, I'm at a point where it's like, I try to just avoid shiny objects. The grass always looks greener somewhere else, guys. Most people like get into one thing and they start having, you know, difficulty with it. And then they're like, this other thing, that's what I need, right? And then they start working on that. And then they start hitting some difficulty with it. And then they're like, no, this can't be it. Like, it can't be that hard. Like, right? There's something somebody else is doing that is easier. No, nobody has a shortcut. Nobody has a secret sauce, right? There's no secret. It is just that hard. And that's why so few people are successful with with it. And your best chance of success is just mastering one thing, right? And working through the difficulties. There's pros and cons of every different strategy, every different trading instrument, this, that, and the other. But people quit too early because they think, it can't be that hard. It can't, like, somebody else knows something that is easier, right? It shouldn't be this hard. And the reality is, like, no, everything is that hard. And you'd be successful at probably anything if you just stuck with it long enough. Somebody asked if I trade pops or personal account. I just trade a personal account. But to me, the biggest advantages of doing this, like with order flow, is one, you know, risk versus reward. You can maximize risk versus reward. You can see what's really going on with the auction. So you have confidence in what you're actually doing. You have data and reasoning behind it. I'm not just like kind of guessing, which for my kind of mathematical brain reassures me to have diamond hands, as the kids say, on my trade setups. And then two, it keeps me out of things that are not good. And that's the biggest thing I think a lot of people struggle with. So it helps me see when there's good opportunity and when there's not, and to avoid the things that are not. Above all else, regardless of your trading strategy, regardless of your confirmations and everything else, like, consistent risk management is the number one key, guys. Because everyone loses starting out in this game. Like, I don't really know anybody that's a very good trader that just won from the get-go and just kept winning. Like, maybe it's happened, maybe it's some people, but I just haven't come across it. And this is a very long and difficult game. That's why I talk about winning slow over the long term and letting that compound. But people try to do too much too fast and get themselves into trouble. And you have to be able to survive first, right? And risk management is what will help, like mastering the skill of risk management, like consistent risk per trade, per day, etc., is what's going to help you survive long enough to master the skill. So if you can't master that first and foremost before anything, nothing else matters, because you're not going to survive the game long enough to master the skill to see any kind of positive results from it. Sellers clearly in control of the tape still. There are days like this, guys, where we just keep trading lower or higher one way. And, you know, unfortunately, I just don't make money on it because, like I said, I need to see good probability and risk versus reward. And there are plenty of days where we just shoot in one direction, and you can sit back in hindsight and say, you know, you could have just gone short at any point and made money. Yeah, do that the next 100 days and let me know how it goes for you. So, you know, sometimes if I don't see an opportunity that aligns with the setups that I like to trade, and we just, you know, kind of keep going one way or the other, it's all good. I'm looking at not the outcome of today. I'm looking at the outcome of like the next 100 trading days, the next 1,000 trading days. What's your win rate, brother? Depends on the month. On a really, really good A+, like I'm just absolutely killing it, like 70+% average, I would say like 40 to 60%, somewhere in that range. I'm right in the middle of that right now. Hang on a second, guys. All right, guys, exciting news. Breaking. We got some giveaways. Tape is kind of boring. We're grinding it out lower here, not really at a significant level. We got some giveaways. Some buying stepping in here. It's just gone nowhere each time, and we did just touch that 75 to 70 zone that I talked about, though. We just touched it. I'm kind of sitting back here blabbing and I missed it, but we just touched that 75 to 70 zone that I've been talking about all morning. All right, so only enter this in the chat one time or you will be disqualified. Just letting you know that. So if you spam the chat with this, you're not going to get pulled for it. But if you enter in the chat !join, you'll be entered. We're giving away some free accounts. So free accounts with Apex, Funded Next, and Alpha. So literally risk-free opportunity, right? To change your life, or if nothing else, just learn to get 1% better every day, which is what I focus on. I don't focus on outcome. I focus on trying to get 1% better every day. So here's your opportunity to trade risk-free and get 1% better, hopefully. We're going to be collecting names for that giveaway. Wow, 10-point bounce off that zone, man. Precise as hell, dude. Holy. All right. So I didn't take the trade, right? But do you guys want to see how I came up with that level? So like we had that whole, let me show you this. This is a perfect example of like why order flow is so important, even like within that. So look at this. So here's a 15-minute chart, right? What I've been talking about this all morning, right? This is not random. What on this, other than this wick here, yeah, you could say, okay, wick test, but how did I precisely look at this area specifically from 68.75 to 70? Does it continue from here? I don't know. I just knew it was a key area to watch for a reaction, right? I was kind of in the chat, guys, and I missed it. But this is a prime example, right? So I'm looking at a 15-minute chart. You guys have heard me since the pre-market talking about 68.75 to 70 is the first kind of key area that I'm watching. So like looking at this, yeah, we see buyers were aggressive here, but how specifically out of this whole move did I know to look at this 5-point area? Do you guys want to know that? Will that be valuable for me to show you? Like how did I know to watch, you know, and it's just a probabilities game, right? It could continue going up from here, or it could reverse and trade back through it. But out of this whole bounce from yesterday, how did I know to specifically watch that area? All right, I'll show you. Let me go back on my footprint chart. And I'll show you. I could show you on Bookmap, but I'd have to pull up yesterday's data and replay it to show you. And this is why, you know, somebody asked a great question earlier. Why do I need to look at order flow if I can just see, you know, where aggressive buyers? Yeah, we saw an aggressive move up on the candle chart all the way from 68.55 all the way up to 68.95. So good luck with that 40-point zone, bro. So sorry, it's taken me a second to pull up my chart here. So yesterday, on that really aggressive bounce, right at the close at 1600 here, around 1600, 800 lots transacted here, aggressive buyer, 500 lots. And on that whole bounce up, I can go back. Do you see anything like that along here at the delta? No. 400 lots here. So I was marking this zone between 75 and 70, where I saw all of that large volume transact specifically. 400 lots, 500 lots, 800 lots, like that's deep pockets and right at the close too. Right? So they could just be market on close orders, right? But regardless, it was enough size to catch my eye going into this morning to mark that with a star as a place to watch. So that is why out of that whole 40-point zone on the 15-minute chart where buyers shot up aggressively, I had that specific 5-point range to watch. So say you are an ICT trader and you watch fair value gaps. If you get nothing else from this, learn how to just configure a 5-point range footprint chart. For example, I have a free video on YouTube on Tradeovate showing you exactly how to configure it like this. And then look for things like this to add confluence to your fair value gaps so you can pinpoint more accurately. That's not hard. All right, guys, I got a list of people. We're going to do the giveaway. I'm I'm kind of sad that I was blabbing and I missed this catch. You can see, look on the heat map here, see this large dark order here? And to be fair, if I was not like zoomed in and ready to go on this, and I would have been more zoomed in and ready to go on this if I wasn't blabbing, but you can see how we hit those orders there and just shot up from it. And then we tried to pull back, and look on the heat map as we tried to pull back just a little bit here at 76, 75. Look at all of that passive buying stepping into it. It couldn't even pull back. So to me, after seeing this bottom with the context that we're in that 70 to 75 zone that I talked about, right? That is key. It's not at a random place. I already knew about that 70, 75 zone to watch out for. Then I see a price shoot up out of there, right? And I have this expanded, but guys, this is only a couple points. That's 74s, that's 77s. So we're talking risk versus reward, very, very high. So I'm super zoomed in here, so it might be easy to lose context of how tight this is. And then on this pullback here, look how the selling tried to come in and all this passive. So that's an instant buy for me right there at 77s. Again, I was talking, I missed it. But that's an instant buy there for me at 77s, and just put a stop there under 74.25s. So you're talking 2-3 points of risk for, and what did I talk about all day? I'm just targeting a mean reversion. So what does a mean reversion mean? Like just back towards the middle of the range. There's VWAP, 90s, these highs, 85s. So say I just targeted 85s to 90s, these highs, mean reversion. So 77s to 85, 90s on 2 or 3 points of risk. You do the math. It's a good business model. But I was talking and I missed it. So it's all good. I'm here for you guys today. All right, let's do this giveaway. So how many do we got? How many giveaways do we have? 3. So I'm pulling 3 names. Mods, can you confirm? All right, let me pull this up here. I'm not picking myself, guys. I'm just spinning. I'm just rolling the dice. It's a probabilities game, just like trading, okay? Yeah, but look how perfect. Like, so mean reversion setup, we hit that zone 70 to 75. I've been talking about it all day. Target liquidity over these highs here. Look, 1, 2, 3 highs here, 86s into VWAP. So that's the mean. Yes, you could hold for the top of the zone. You know, we may blow the roof off this thing, but the best probability of the squeeze, you know, just given the context of this week being kind of a mean reverting week, I would just be looking at these highs to VWAP here as the highest probability target, which is still, you know, 2-3 points. We'll say on the high end, right? 3 points of risk here from 77s to 74s. 77s to, you know, 86s is the first target, is what, 8 points? So at a minimum, you're talking almost 3R on that setup. All right, first winner, Shinzu 2863. Shinzu 2863. Giving away the Apex funded account, 1 Apex account. Let me put the wheel on stream. Shinzu 2863. There he is, guys. Mods, you got this? Let me put this over here so we can watch the price as well. Look at that banger, guys, going all the way back to VWAP. So in this case, I know it's hypothetical, but you know, I gave you guys the zone and I showed you guys the confirmation in real time. In this case, you know, had I not been talking and had I taken this trade, I would have probably first just targeted the 86s and scaled half. And then I would have trailed my risk probably 50% between the move. And I'd be looking for these 90s for that target up there at VWAP. Just giving you guys like how example of how I manage trades. So it would have been like a 3R and like maybe, what is that, 90? Can't do math right there. And we said the entry model that I was looking at for that playbook setup would have been around 77. So 13 points on 3 points of risk. So it's about what, 4.5 R. So in this setup example that I just gave you guys, that is, you know, scale out for 3R, and then my trailed risk is about 1.5 R for the runner, and then the second target is about 4.5 R. And again, it may keep going up from here. Don't know, don't care. Trade my targets, the best probability, and then get the heck out and move on with my day. All right, I'm gonna remove from this list and we're gonna spin again. I think we got 3 giveaways. So that was, I believe, for our Apex account. We have funded next. Newton. I'm not going to mess this up. You can see your name. So, okay, here's another example, right? Here's another thing that's valuable about the order flow and the heat map, right? See all this liquidity built up here? This is resting orders. Like, so I'm looking at this as stop losses, right? Stop losses for everybody that shorted that downside move. Now that we're short squeezing, if sellers do not step in and defend VWAP here, I'm looking at all this liquidity as a target. Like, that's lunch, right? If we squeeze up through them now. So the resting orders for me can be both key areas to watch absorption around for an entry. It can also be key information for a target and understanding, like, if we're squeezing on a move, you know, a short squeeze, for example, I know if buyers stay strong, and I can clearly see right here on the heat map where everybody's stop losses is that shorted earlier, you know, we're going to keep squeezing through them. They're going to have to buy back their positions to cover their shorts, and that's just going to continue to squeeze price higher if sellers do not defend here. And this is a point, in my opinion, watching this is going to be an area sellers would want to defend. And that's why it was my target for this trade. Congrats, congrats. All right, we got one more. An alpha account. Thank you guys that have stayed on for the stream. I know it's not super excited. I had this set up, you know, unfortunately missed the entry myself, but I try to, in all the streams that I do, I try to give people value, not trade signals, right? I'm trying to share things with you that can actually help you improve. That's my goal with my streams. Gulam, if you're in here still, let me know in the chat. And look at this. So did you guys see how sellers tried to reject there, but it just was not, it was nothing significant. In fact, it was less selling than we saw on these pullbacks here and here. So if I'm in this and I'm trailing my stop, I'm like, oh, it's on, right? It's on now. We're squeezing. So I'm just going to trail my stop and keep holding. Right? Short squeeze is in effect. And we're hitting all that liquidity up there. There's Gulam. Exactly what I was just talking about, guys. You see that real-time short squeeze? This is a real-time short squeeze. Stop loss getting crushed. See how we tried to pull back here? There was some selling. Get rid of this. We tried to pull back here. There was some selling. Still not enough to reverse. Sellers tried to reject VWAP here. Look how even smaller, right? Now everybody that sold, okay, they're effed now. Now, so if I'm in that long from here and I'm trailing my stop along this move and I see that weak selling and then us pop, I'm like, okay, now I have confirmation to hold because the short squeeze is on. This is the mean reversion that I've been talking about all day, guys. Out of the whole dang chart, look at this. I'm sad that I missed it, but I'm glad that I can share with you the analysis with you guys in real time. Like I shared this zone with you guys in real time. If I pull up the Discord, I shared this at 7:53 a.m. this morning, that zone. And I shared with you guys exactly why I was watching that zone. There's no hindsight analysis. And the target being the mean reversion back up into this range. So see, this is that range that I marked, 06 to 93s. So target 1, prior highs, target 2, that VWAP around 90. Now we're all the way back into that middle of the week zone. And that's, you know, that's why it's important to not start with just looking at things too lower time frame. You guys see how I start with what is the context in the market overall? What is going on? You know, we're very much in a mean reverting condition, even though, you know, bulls are more in control. We're near all-time highs. So if bulls are more in control, we're near all-time highs, and we're in a mean reversion market, what it makes the most sense, the best setup for the most probability, the most risk versus reward, a bottom reversal mean reversion, right? Because bulls are in control, higher time frame, and the conditions are mean reverting. So combining that, like the best probability setup to look for today was the bottom reversal mean reversion. And where exactly off that zone where I showed you guys that aggressive buying of why I marked this zone. Yeah, we could go for the weekly high. For me, in these conditions, like that can work. I don't typically trade that way, at least for scalps, right? I typically just take the highest probability piece of the move and I go on and move on with my day, especially on a Friday. It's 10:45. My data tells me don't enter trades too long after this time, especially on a Friday, because volume and volatility tends to dwindle off. So after we've made this move, the highest probability thing that I see for the rest of today is just a chop in the middle. Does that all like at least make sense to you guys to help, you know, add precision to your trading? I do live trading and coaching every day. I'm not trying to self-plug here. But I just want to show you guys the day a member in here just had, right? Pretty amazing. It's just a matter of understanding the context and the order flow and what's likely to happen next, and then manage the risk. It's just a probabilities game. Like I take losing. I've lost almost half my trades this month, but it doesn't matter when you're able to find reversal points like this where you can maximize risk versus reward. If you guys are not already in the ChartFanatics Discord, I have my own channel in there, and I'm going to be sharing a lot of information there. So if you're just on YouTube and you're not already in the ChartFanatics Discord, it's literally free. It's probably like one of the best free resources you can have. There's so many free resources now, guys. Highly recommend getting in there, and I'll be sharing a lot of insights there. Does anybody have any other questions about things that we've covered, things that you're unsure about, things that you're struggling with? Let me know in the chat. I'm checking out the chat. To me, what I'm watching here is like, we're coming all the way back up to the middle of the range around 6,900. It's a little tricky here for like, look at the squeeze off that zone, amazing. But initiating anything here now just looks less quality. We are sweeping these highs here into this, dare I say, fair value gap that formed off the open. So that could be another point after sweeping these highs. Sellers could want to be more active again, now that all these stop losses just got crushed. So I would watch out for that. Again, I would also bear in mind context, like what is likely to happen next. Today's Halloween, it's Friday. Less and less people are going to want to trade as the day goes on, which means less and less volume and volatility as the day goes on. And buyers and sellers just wiped each other out here in this V-shaped bounce. So people are getting exhausted. So yes, we could reverse back to the low. Yes, we could go squeeze out the weekly high. But in my mind, probabilities wise, it's likely to get more and more grindy and sideways. Blair put a good point. He said his biggest struggle is kind of just like gaslighting himself into believing there's a reason to take a trade when there's not. Yeah, that's one of the hardest things in trading, is just getting to the point. And that's what somebody asked earlier in the stream, like, what was the point that you had like an aha moment? There wasn't like a significant one, but one of the biggest is just getting to the point where you really believe and understand for yourself, like you just can't control the short-term outcomes, and you just have to be okay and at peace regardless, up or down every day. And the only thing that you can control is the repeatability of the process that you take every day, and that's it. And like every day I meditate before I start trading, and I'm just thinking about being at peace, like with whatever outcome that day. Like I have my limits set for the day. I know there's a few things that I know for sure going into the day. 1, I will never lose more than my max daily loss limit, period. 2, I will not take any trades that are outside my system. 3, like I don't control the outcome, and I'm just going to be at peace with whatever that is in the short term, win, lose, or nothing. And that is a hard place to really get to accept, because I think trading attracts a lot of A-type personalities and players, right? We want to win. We're competitive, we're aggressive. And that mindset will kill you in trading, because you can't control it no matter how hard you play. So getting to the point where you can just really be at peace with that. And that was me yesterday, guys. I had great game plans yesterday, and there was good moves off of them, and the setups that I was looking for worked out perfectly. And I just missed the timing, and I took like a 2-point loss and a break even. And I just sat there gritting my teeth because I just basically took it off the chin, and there just wasn't another good opportunity. It got choppy. Like initially when I took the trade, it looked good, and then it got choppy, it swept me out. And I was sitting there and I was talking in the chat real time. I was like, you know, I know the conditions that are likely to hurt me. And so as soon as I see that starting to develop, I just don't trade. And there's literally nothing that you can do. And fighting back is only going to punch yourself in the face in that moment. But with enough pain and enough losses and tracking it with things like TradeZilla and stuff to where you really understand it for yourself, I think it helps to see it and understand it for yourself over time by tracking your data with something like TradeZilla. Then you remind yourself of that daily and weekly by going back and reviewing your data and reviewing those things, and you understand, oh yeah, that's why I need to do this. Hopefully that makes sense to everybody. A beginner's approach to order flow. Carmine Rosado has a really good series on YouTube for free. That's a really good intro to order flow. Check that out. The other thing is just like start watching it. Like don't try to 180 change what you're doing if you've been trading for a while, but maybe just have a screen that you can watch it and start understanding and watching things for yourself play out with, you know, candle chart patterns, with other things. And it's a game of pattern recognition. Like over time, you start to get a feel for it. It's like a spidey sense, because your brain subconsciously is connecting so many dots. Like your brain, the human brain, is like the greatest AI supercomputer to ever exist. And I don't care what it comes out with AI, with trading, and whatever else. It was made by humans, and it will never be smarter than a human. Like, yeah, it can come to binary results, like ones and zeros, faster than we can in our frontal brain, right, in real time. But your brain, like, especially when you like learn to identify things like with so much repetition and so much experience, it's at a subconscious level, then you start to just identify things. Like I said, my best trades, like I know the setups that I trade so well. When I see it start playing out on the order flow, it's like an impulsive reaction. Like I can't even stop myself from just executing the trade. But hopefully you guys caught some wins this morning. If not, hopefully you avoided some bad trades. And number one, hopefully you understand the concepts here better. And always start with understanding the context and location and things in the market, right? That's why I went back again and again and again and said, you know, we're kind of in the middle now. We already squeezed that juice up and down, right, off that zone. Now we're back to the middle of the weekly range, guys. And it's Friday and it's a holiday, and volume and volatility is likely to die throughout the day. So bear in mind other participants in the auction. Again, if you're not in the ChartFanatics Discord already, let me pull this down here. This was the game plan that I shared if at 9:25 a.m. And you can see in the game plan that I shared, I said I was watching that 68.70 to 75 area to buy dips. So on days where I share the game plans in there, you'll see more details and analysis and screenshots. and that's literally free. Yeah, I think I did all 3 giveaways, didn't I? Mods, did I not? Did I miss one? No, I think I did all the giveaways. You can see how sellers are trying to resist up here, this opening range. So here's one more thing that I'll leave you guys with as we come to a close here. You know, I trade from a structure perspective based on like supply and demand, support and resistance, etc. But oftentimes, especially on weeks like we're having today, this week, there's kind of a lack of quality like supply and demand, support and resistance levels. And I start becoming more creative. And I'm looking at the auction ranges, right? I'm looking at open, high, low, and close as key points. And I'm looking at the ranges that form overnight, the morning session, right? So we had that range from 6906 to 6893 that I was looking at. And then I am more creative at looking at order flow levels. You guys see how I came up with that key demand level from 6870 to 75. That was from the order flow that I showed you guys, where those large orders transacted. So, you know, in different conditions, when we have like cleaner levels and zones for like support and resistance, supply and demand, I will use those and I will look at those as well. But you can see on days like today and like we've had this week where I'm a bit more creative and looking at the auction purely from the order flow, the volume profiles, the ranges that are transacting in the sessions to come up with the story and the picture of where the market is at. Make sense? Thank you all for joining in today. I appreciate everyone's time. This was fun. Again, check out the Discord link. If you'd like to connect with me, if you have any questions, I'm very responsive on Instagram. If you send me a DM, I try my best to help people. You know, it can be a painful journey in trading and a long and difficult game. So I just try to share insights that I've gained to help people improve. So if you shoot me a message on there, I try to be responsive as much as I can to help people. Also, feel free to reach out to me in the, like I said, the ChartFanatics Discord. I'm in there and I'll be posting more stuff in there. Appreciate everybody's time. Thanks for joining in. You guys are awesome. I'll see you guys, I think next Friday, 9 a.m. Eastern. We'll be back in here. All right. I'll see you guys in the next one.